Time for the Tesla weekly update here. And again, I have Tesla pulled up on the weekly chart. And we can take a look here and see exactly what happened just with the Ichimoku by itself. So, using the Ichimoku, we can see that this orange line coming down is the baseline, right? And the baseline sits at 195.03, and it did close back above it for the first time. That's an important development, really, because when's the last time it closed above the baseline? Well, it was maybe back here, right here, in December 26th, the week of December 26th, 2023. So it's been over 6 months since the last time it closed over this baseline on a weekly close. So that's a positive development. And also, what's a positive development is finally flipping the 21 EMA. It could be to support now, right? We don't know if it's support yet, but I'm going to consider this 183.69, this 21 EMA, as support. So if price cannot break higher, it could come back down to this support zone down here and find its new low, its new higher low possibly, for a continuation higher. So even though it didn't close above the levels that I wanted at 201, there still is a possibility for things to continue much higher after it successfully backtests this new previous resistance, possibly flipped to support zone. Now let's go take a look at the Gann on linear scale. And nothing has changed on Gann on linear scale, so still the resistance level is going to be the top of the arc here. If next week were to hit that, it would be 224, that zone, maybe 225. That would be the resistance of the arc, but probably more time will take before it gets to the arc, so we'll have to wait, right? Just wait more time. But if we turn on the confluence of the Gann square, or the Gann box that I used last time, we can clearly see that it held as support. We'll take that one off so you can see it more clearly. That angle that I was mentioning last week held perfectly as support, and now it's continuing higher. So for me to really get excited, I want to see a weekly close above this high of 205.60, because if it can close a week above that, it's going to go to the next angle above, which currently sits around that kind of the same level, like 228, 225, around that same level, right? So that's going to be another big resistance zone, possibly even 230. And what else sits around 230? Well, that's right. It's the 200-week moving average. It sits at 230.61, which is lining up almost perfectly with that angle. So we know where a lot of resistance is going to be up here, and we know that that 201 level is going to be really important to break, and so far it did not break that. And let me just go show you that 200 level on log scale right next. So here is the log scale version that I've showed you before, and we can see that one thing is really standing out, and that is that this right here, the blue line that I've been mentioning for a long time now, it got rejected, right? I wanted to see a weekly close above that, but it could not do it, around 201, right? So if we zoom in a little bit more, we can see that wick. It did wick above a little bit, but then it got rejected and closed below. And it's basically like Steve, our Tesla tracker, was saying that there's a lot of open interest and calls around the 200 level. So they wouldn't let it close above 200 this week. So which kind of means that it could come back down to test the support. And that support zone could be that 21 EMA that I mentioned before, around 183. But one thing that I did want to point out that is a very positive development is the new Gann scaled chart that I showed on my previous video where I showed Tesla going to 5,000. I want to show you what just happened there. And here's this new scaled chart that I have shown you before, where this arc and this bottom arc have been very symmetrical throughout time, even this blue level, right? And we can see that during the January 2023, it made the low and finally touched the bottom arc, and which confirmed it as support. And one thing we can see here is that this top arc has been a support and resistance zone throughout time, since essentially back here, since it broke out in October of 2021. And it was support right here in February 22, and it was support starting after it broke back above here in August of 23, and it was support here, then flipped it to resistance here, and here. And the interesting development that we see is it finally broke back above this blue arc. And what that really means is that this top blue arc could be the new support zone, right? And if we add the confluence of the 8 EMA on there, or the 21 EMA, the 8 and the 21, the orange line is the 21 EMA at 183, and that is lining up almost perfectly with that blue arc. So this could be the new demand zone if price were to ever get back into the mid to low 180s. It's looking like that could hold, as this arc could be looking to flip to support. Now, let me just take that back off, and we can see the other confluence of why price stopped where it did, and that's by putting on that Fibonacci extension. And if we remember, I did this before, where I did the high back here in 2017 to the low right here in 2019 of June. And we can see that the 3.618 Fibonacci extension is still getting in the way as well, which is even more confluence of that 200 zone, or the $201 zone. And essentially, I would like to see weekly candles close above that, but ultimately, I would love to see its first higher high from this candle close right here, 205.60. So, in my opinion, nothing really exciting is going to happen until this 205.60 is closed, like a weekly candle closes above it, because that would make market structure have its first higher high. And that would be a change of market character, right? It'd be a good thing for things to continue higher and higher. But is it going to go immediately higher? No, because we have this resistance first that it needs to break, the 199.99 or the $200 level. Then we have to get above this 205.60 level, close a week above. But then after that, we have all these moving averages here and the Ichimoku right here that's getting in the way, right? It's getting in the way. And we can see that all these averages are kind of lining up where the Ichimoku is. So essentially, nothing is really going to explode higher until weekly candle closes can start to close above this 200-week moving average, currently around 230.61, or even the top of the cloud, which could actually line up around the same, right? The same time. Like if it takes maybe a couple more weeks, then maybe the 200-week moving average will be here, which would line up kind of like to the top of the cloud. So if weekly candles can close above that, then it's got a clear shot to the previous lower high, which is around 260. And then after that, it'll have a clear shot up to the blue line at 290, which is really the last resistance level before the 4.236, which sits right here, and the previous all-time highs. But really, it's just one step at a time, guys. Just one step at a time. So the first step, we already completed. We closed back above the blue arc. The second step, got to close back above this 3.618 or the $200 level. Third step, got to close above this 205.60, right? And I'm talking about weekly closes, weekly candle closes. I'm not talking about daily candle closes, weekly candle closes. So, yeah, then 205.60, then this zone, and then close above that, then the 4.236, and then it's moon time after that, right? So it's a lot of steps to go before this chart still becomes bullish, right? But like I said, just take it one step at a time. And so far, this first step is looking very positive, and it's looking like the new demand zone could be in the mid to low 180s.